Welcome back to the Fire Grind. My name is Daniel, and on this channel, we talk about personal finance. We have a focus on the stock market, and today marks the start of a different series. I'll be going over major events that have happened over the past couple of days, and some events have actually caused the markets to move. And this will be followed by a quick technical analysis on the TSX stock exchange. All this I'll try to cover in under 5 minutes. So here we go. So on Monday night, Peter Navarro, who is one of Trump's advisors, actually went on news and talked with the news reporter, and the news reporter asked him something about the China trade deals, and he responded with the statement, "It's over." And this caused the Dow's future market to plunge 400 points. However, he quickly clarified his statement and corrected it, saying that this was not referring to the China trade deal. It was more referring to the trust between China and US, because China seemed to falsify its numbers of coronavirus cases out there, and this is very misleading to the world, which could have been one of the causes for the pandemic to be larger than it actually could have been if they reported correct numbers. President Trump, on top of this, also created a social media post stating that the China trade deal is well intact. And this is probably because elections are coming up, and Trump's re-election largely depends on how well the stock market does. Because since he got elected, the stock market has hit all-time highs and actually went up by about 20 to 30% the following years after he got elected. So if he wants to keep office, he's gonna have to keep pushing the stock market up or keeping them at all-time highs. But one thing to note, if the stock market doesn't remain at all-time highs and actually sees another crash before the elections, I think there could be another further plunge after the elections because Trump's presidency could be at risk. And this is ultimately bad for the markets because Trump's policies favor capitalism. However, if another candidate was elected, the capitalist society would not flourish as much. In other news, airline companies go and raise more capital. Companies like Air Canada actually raised $1.23 billion in this past week, and that's on top of the $1.6 billion that they already raised. And American Airlines is predicted to raise another $2 billion on top of all this. And if you look at airline stocks, they're relatively flat right now. And with this new injection of capital, it comes at a price. And looking at the loan terms right now, they look to be around 9 to 10%. Whereas if you were to actually go get a bank loan for a mortgage right now, that's 2%. So clearly these lenders are pricing airlines at a higher risk by charging them 5 times the amount that we'll be paying for a house mortgage. So beware if you're investing in airlines. Another thing to note is that the NASDAQ hit all-time highs. And again, in my previous video, I talk about how technology stocks are really propping up the stock markets right now. If you look at stocks like Apple, who just had their worldwide developer conference, they announced some pretty amazing news that they're actually going towards their own silicon chips instead of using Intel chips. So this is going to mean more profitability for Apple's hardware in the future. So this is what caused Apple stock to move today. And I think right now, technology stocks are releasing good news like always. Basically more product updates and more efficiencies. The reason why they're being propped up right now is because everyone's selling out of the other equities who can only really come out with bad news. Because the economy has contracted from its earlier February all-time highs and businesses are still not at 100%. But technology companies, they can still operate in this time. People can still work from home right now and develop new tools to make more efficiencies in other businesses and consumers' lives. Now taking a look at the TSX charts. We can see the big sell-off in late February to mid-March, and the market has recovered decently well in the TSX, but not as good as the S&P 500 and the NASDAQ. But in the recent couple of weeks, we can see that the TSX is actually trading between its 50-day and 100-day moving average. And this actually happened from June 2nd to June 3rd, where you can see this gap. And this was actually a huge bullish movement for the TSX because it gapped well above the 100-day moving average, signaling that investors are bullish and pushing it above this average. But we can see that it came back down and filled that gap, and it actually bounced around the 100-day moving average for about 3 days until shooting back up above. So I expect the TSX to trade between the 100-day and the 50-day moving average. Any sort of large move above the 50-day moving average would indicate more bullish movement, and we could actually see stock prices hit all-time highs if we see a huge candle above the 50-day moving average. However, if we see a candle that actually is significantly below the 100-day moving average in the future, this would actually signal a bearish signal, and we could see another stock market correction from here. So definitely keep your eyes out for the TSX charts if you're a Canadian investor. So that's all the updates that we have for today. I believe I kept it under 5 minutes, so hope you enjoy this content. Smash that thumbs up button if you enjoy this video. Subscribe and hit that notification bell if you want to see more content like this, as well as leave any comments down below as to why you believe the markets have moved. Because in this 5-minute segment, there's no way I could have covered everything. Keep up the grind and have a great day.